Hey, we got a great guest right now, Apollo Lupescu, and we had Apollo on before the elections to talk a little bit about the elections and markets and
The correlation between Democrats and Republicans versus how the markets.
yeah, that's right. And Apollo is one of these guys. He's part of Dimensional Fund Advisors, but he's probably the best I know about taking complex financial matters as it relates to the markets and put it in layman's terms. And I think the real benefit there is helping people stay invested during market cycles when their emotions are telling them something different. So,
in fact, we had him speak at our national conference where we bring all our advisors in Dallas. And by the way, Apollo, I have been to, I don't know, hundreds of these things. Your talk about the resilience of American business was great. And it just reminded me that whatever the world throws at American business, their job is to overcome.
Yeah, so you're gonna share a bit today on tariffs and the markets and that sort of thing, right?
Absolutely. Well, first of all, thank you so much for the invitation to be part of this, and also for the invitation to the conference. It was great fun for me. And you're absolutely right. I mean, we do live in a country that is built on free markets, and companies are incredibly resilient because people are resilient. And as much as people are pessimistic about what might come next, the reality is that companies have always faced challenges. And over the course of our history, they've been creative. They've been innovating. And sometimes these crises have produced opportunity. So I'm confident about the future, and that's a positivity that I think it's in my genes somehow.
Well, it's really interesting, Apollo, when you look at Liberation Day, when Trump came out and said he's going to slap tariffs on everybody, and the markets tanked, and we essentially, I think we had an intraday bear market on the S&P 500. We had 20% intraday, and then maybe I'm off, but somewhere close to that, and then everything's recovered, and then we went on to new heights, but that doesn't seem like the tariff issues resolved itself.
No, it's not, and it's a big issue right now. And what I found too is that some folks know the term tariff pretty much like a jargon. Not a while ago I went with my dad to the doctor, and he found out he has some issues with the pancreas. And I'm not a doctor. I'm not an expert. I mean, I have some general education, and I know it's in my body somewhere. It does something, and I don't know exactly what. But it was interesting for me because the doctor was very nice at explaining what it does. And for a second, I felt like, should I know this? And then I realized, no, it's not my profession. That's why I go to the doctor. And even though maybe it would be nice if I knew, I'm not required to know. And I find in the context of tariffs that this is a word that we understand as advisors, as economists. But I found that for a lot of folks, it's a bit of a mystery. And a lot of times they get the definition from whatever news outlet they might be listening to or watching or reading. And I'm wondering if it's worth for like a couple of minutes just making everybody clear on what exactly is a tariff. How does it work? Because from there, you kind of get a sense of the impact that it might have on us as consumers and businesses and the market as a whole. Is that
yeah, please. Yes.
Yeah, and I'm going to use something that...
And by the way, I would be... shocked if the definition of tariff is different on MSNBC than it is on Fox News. But anyway, there we go.
You think? All right, so let's make some sense out of tariffs and what exactly are they? How do they work? And I'm going to use an example that is near and dear to my heart. I'm not Buddy the Elf, but I do put maple syrup on a lot of things, maybe not spaghetti. And I had it this morning on my yogurt. So I love maple syrup. And
It's hilarious.
I buy it at Costco. That's where I go get it.
By the way, Apollo does not look like the kind of guy who loves maple syrup. He looks super fit.
Well, I actually love the fact that you could work a Buddy the Elf reference into an economic talk.
Who would have thought? So in the good old days, before tariffs, Costco would need to buy maple syrup, so it would sell it to me, and they would go to the Vermont producers and say, can I buy you maple syrup? And those folks would say, sure, I'll sell you the maple syrup. But it turns out there's not that many maple trees in Vermont, or at least not as many as perhaps across the border in Canada. And Costco would also go to the Canadian producers and say, hey, friendly Canadian producer, do you mind selling me your maple syrup? And those producers, they say, sure, I'll sell the maple syrup, and just come up with a number. Let's say it's $20 a bucket of maple syrup. Costco would then take it for $20, and then it would add a few dollars for their warehouse, the employees, the electricity, their profit margin. Let's say $5 for the sake of the example. So between the $20 they pay the producer and the $5 they added, Costco, I would go pick it up for $25, and I'm a happy camper. I love it. Everything's great. But now the president comes along and says, we're going to impose 25% tariffs on all products coming from Canada, and let's say maple syrup is included in that category. Well, how does it work now? Well, the legal burden of paying that 25% of the value of what gets brought in the country, so 25% of $20 in this case, it's $5, it is on the importing company, in this case, Costco. So Costco is legally responsible now to pay $5 to the U.S. government right away as they bring in the $20 worth of maple syrup. Now, where is that $5 going to come from? That's the question. Well, one thing that Costco can do is go to those friendly Canadian producers and say, listen, would you mind selling me that maple syrup for $15 instead of $20 because, I have to pay the government $5. But those Canadian producers are saying, wait a second, no, I'm not going to do that. It's, that's what it costs me to make. I don't make as much money on it. And by the way, where else are you going to get maple syrup? It's not like you can plant a tree and quickly get maple syrup. No, I'm going to stick with my $20. Well, Costco then obviously doesn't have any other place to get it. So they say, fine, I'll pay the $20. And then they bring it in and they still have to pay the $5. Well, the second option is that they send the government the $5 that they would keep, but that doesn't make it like a viable business. So that's not realistic. So what's the third option? The third option is that Costco would probably need to increase the price and take the additional dollars from us, the consumers, and send that to the government. So in this world of tariffs, there are three parties involved: the producer, the importing company, and the consumer. And who pays the tariff is unclear, because even though legally Costco is responsible for paying it, it turns out that it's more complicated, because in some cases they could go to the producer and the producer might say, well, yeah, sure, I'll take a little bit of I'll drop my price a little bit. But here's what we found out of the first Trump administration when they imposed a 20% tariff on washing machines. There was an economic report written afterwards, and what they found is that 12 out of the 20% of the tariff was passed on to consumers in the form of a higher price. And the rest were haircuts taken by the producer and the importing company. So, everybody kind of took a hit there, but the bulk of it in the case of those washing machines was paid by the consumer. So it's a form of a tax that it's not collected through the tax forms at the end of the year, but rather it's collected and paid by the importer. But it is possible that the consumers might bear the burden of this tax if the importing and the producing companies don't take a hit. So it is, again, interesting, because when you hear about inflation perhaps coming back, it is likely that in some cases, not in every case perhaps, but in many, many cases when there is not an easy substitute and everything is pretty much made abroad, there's little incentive for the producer to cut their price. Where else are you going to get it? And in that case, we might see higher prices, perhaps fewer selection in stores, and perhaps lower quality because of these tariffs. And again, it depends on product by product. It depends on where things are made.
Apollo, so it's a consumption tax. If I was Costco,
that's what it is.
It's a consumption tax. If I was Costco, do I lower my margins or I keep my margins the same? So therefore, the net profit actually that goes to me as Costco actually goes up.
And that's the thing. Like, Costco is a pretty unique example, and I just happen to know that the margins at Costco are capped at about 12 to 14%.
Yeah, 12 on their own on products that are not Kirkland brand, and 14 on Kirkland brand products.
Exactly right.
We get mail. We get my wife has her own parking spot at Costco.
We all do. When you spend $10,000 a month, you remember your name. I love that.
I have a bunch of kids. So do they keep the margin? So Costco, they would keep the margins the same. So therefore, their net profit would actually go up with the tariff.
If they do that, and Costco has been, again, it's absolutely possible that they do that. They also have to realize that there's a price-sensitive consumer out there, and if they keep the price too high, then it's possible that they might lose sales. So it's a very interesting dynamic. But by and large, what we do find is that these companies like Costco, for example, or other companies, they're trying to make up the lost revenue in other ways. And we're finding that, for example, if you go online and you buy things, some vendors might not give you the free shipping, and it's a way to make up for the lost revenue or make up the tariff that they have to pay. And in the case of the washing machines, well, what do you buy with a washing machine? A dryer. And dryers were not subject to tariffs, and yet their price goes up. That went up as well. So it is interesting that companies will try to figure out perhaps how to maintain their margins in other ways. But ultimately, guys, what a lot of economists are realizing that a bulk of this tariff for a majority of products is likely going to fall on the consumer. And that's what we're hearing this. So from a company perspective, you see that these folks are trying to negotiate and try to figure out, how do I keep my margins? And I'm not saying they're going to make more money, but they're going to try to figure out, how do I maintain an operating profit? And again, it's going to that tariff has to come from somewhere, and it's quite likely that maybe directly or indirectly consumers will pay for it, and that's why you might hear about the potential for inflation.
So why didn't we see a bigger inflation bump on this last inflation report?
I mean, it's interesting because I don't want to get too specific in the economics of it, but a lot of firms have been stacking up in expectation of these tariffs, and there's a pretty decent supply that's in warehouses, and when that expires, there's a good chance that the much lesser volume of trade. I mean, I think 30% less ships came into the ports in the U.S. That's going to be reflected at some point, because there's no magic. I mean, we saw the same thing in the pandemic. If you don't bring in stuff and people want to buy it, again, you're going to have fewer choices, higher prices, and perhaps lower quality. Now, with that being said, I do also want to touch on this. Like, why would the government want to take money away from the public? Because that's basically what you're doing. And I have to say there are three reasons, and then people kind of point to, like, why there's got to be a reason for that. And the first one is revenue. And going back to 1776, what's fascinating is that in those days when the country was formed, about 80% of the government's revenue at the federal level came from tariffs. Nothing unusual. I mean, we took 80% of the government revenue from tariffs back in those days. And it wasn't until about the Civil War when we introduced the income tax, and the income tax over time became the primary source of government revenue, to the point where last year tariffs were only roughly about 2% of the government revenue. So we went from 80% to 2%. So the tariffs are not a big part of our budget, and not at all. They're relative to everything else. So the revenue is one reason that we hear the government saying, but again, this is revenue coming from us, the consumers, which I'm not sure that's necessarily something to be trumpeted. The second thing is maybe we want to protect and restrict access, so some industries in the U.S. Would be able to continue to operate, and it could be for strategic reasons, or it could be to protect jobs. And I've traveled the country, and there's no doubt in my mind that has been devastation in some parts of the country because of trade and maybe jobs being shipped abroad. And there's no doubt that between the Civil War and perhaps World War II, there was a major reason why we saw a lot of these tariffs being put in place. Did they do a good job of protecting jobs and adding? Again, it's a really mixed bag, really hard to say. But what we can say, even if those jobs were kept or created in the U.S., it came at a very big cost to society, because we all ended up paying more. And, you might save some jobs in steel, for example, by putting tariffs, but you might lose other jobs down in washing machines because you're less competitive now. So it's really a mixed bag on that. And thirdly is that perhaps there is an idea of reciprocity, that if you are, charging me a certain tariff, well, it's only fair that I charge you the same. And that's, again, being invoked these days as well. And it's legitimate in some ways. I think every country has something that they want to protect. And in other ways, over the past 80 years after World War II, we've championed a reciprocity that was driving tariffs to zero. That, like, what if we have free trade? And that has been sort of the economic regime of the last 80 years. And a lot of companies have built their production lines and supply chains on this idea that we can move goods freely among countries. And this sort of pivot on a very short notice, it's creating really big headaches. Again, the companies are going to try to figure out how to negotiate them, but it is a huge headache if you've had 80 years of a certain regime that's being kind of flipped over overnight almost, and you're going to like, well, what do I do now? So it's really creating a lot of disruptions and
well,
and I know, again, I mean,
but Paulo, but some of these, let's say the tariffs actually work, right? And we're in
work in what?
Well,
one of the three.
well, we're ignoring a couple things. One is environmental, regulatory environment in which we work, right? We export a lot of our pollution. I mean, California is the best at it, right? We don't,
That's right.
we don't
There's
do it
tons of
here.
oil here. Yeah,
but
don't
I'll
drill
buy
here.
the products
That's right.
that actually. Oh, and not only that, we're going to export them to a place that doesn't have any environmental regulations that we have. But
do you remember the book, The Lorax?
Yes.
Yeah, I mean, like I remember reading that to my kids, and that's kind of what I felt like. Absolutely, well, like, some other country can make money, and they might not have truffle trees, but hey, at least they get some money.
Yeah.
But I think it's even for sure that's been an issue. But I think it's even more fundamentally.
Wait, I'm going to stop you for 1 second. So we're all in the same thing, Buddy the Elf and a Dr. Seuss reference. How old are your kids?
When he said Lorax, and I thought, he's not talking about Dr. Seuss.
No, he's
Is there
100% talking about Dr. Seuss. How old are your children?
Well, one of them is 18. The other one is 22 almost.
Okay,
but I keep reading them. I keep reading them at night. I can read the books.
Yeah,
Okay, all
Hey,
right.
kids, to tuck you in.
But in terms of national security, right? We can't ignore the fact that we won. A large portion of the reason we won World War II was because of our manufacturing prowess and how quickly we were able to actually turn that on.
Yep.
But the stuff from getting from concept to implementation, is it even possible now after 80 years?
That's exactly the question. You got it right. I mean, I think that what helped us in those days was, again, it's the ability of companies to be creative. And you saw companies like Ford and GM, where they were not making cars, but they retooled their lines to make tanks and planes, and that's just something that we did on the fly because of this ingenuity of the American people. And you saw that in the pandemic. Yeah, we didn't produce that many respirators at home, but all of a sudden Ford can go and make them. But I think there's a fundamental reality that we're too far along to be able to put that back in the box. I mean, that ship has sailed, in my opinion. And I'll give you a quick example. NVIDIA is an amazing company that designs chips, and it's the poster child of American success in artificial intelligence. Great, but what they do is basically design the chip. So they're like some pastry chef who developed the recipe for the best cookies in the world. So they know that they have the recipe for the best cookies in the world. The thing is, they don't have a kitchen. NVIDIA doesn't have any manufacturing facilities. And what gets even more interesting is that to produce their most advanced chips, there's only one single company in the world that over decades had developed a system to be able to do this thing called lithography and process these chips. Nobody else in the world has been doing it. They have this amazing engineering base that, again, over decades, and that company happens to be in Taiwan Semiconductor Manufacturing Corporation. It's the only kitchen where NVIDIA can bake their cookies. And what's even more interesting, in that kitchen, you need to have an incredibly specialized oven. And that oven is that machine that TSMC uses it's a science fiction machine. If we shoot, Scott, if you shoot a laser from your house to the moon, it would hit a ping pong ball. It's incredible. Like it prints transistors the size of 10,000 times smaller than the human hair. Not you and I, but people who have hair. And it's science fiction, and it's a global supply chain. And in the world, there's only one company that over decades has been able to produce that machine. Nobody else can even get closer. And that company is based in the Netherlands. It's called ASML.
Yes, so and those machines are hundreds and hundreds of millions of dollars.
Oh, yeah. They're like a quarter of a billion.
On a complete side note, if you own NVIDIA and this is news to you, maybe you should not own NVIDIA. Anyway, continue on.
Well, I mean, it's as long as there's a global supply chain and global trade, a global value in that respect. AI to function the way we know it, in order for NVIDIA to be this incredible success story, we do need these partners. And is it realistic to say that somehow TSMC is going to pack their bags and move all their Taiwanese engineers and their families to Arizona or Nevada? Is it realistic to say that ASML is going to pack their bags to the Netherlands and move everything to the U.S.? And then those supplies, those parts that these companies use, they're all going to somehow be based in the U.S. I think it's just complete. To me, it's unrealistic. I cannot imagine that happening anywhere anytime soon or anywhere close to the same level of quality. So to me, what are we trying to do? It's a big question that I'm not sure that most people that I've talked to, most economists, have a good answer. Perhaps there's a greater wisdom, and at some point it'll be revealed to us. But I'm not here to make political statements. I'm a proponent, and I think a lot of us on this call are proponents of free markets. What has gotten this country so far is the ability of companies to operate freely. And I think that the less government intervention, the better. I mean, we've always kind of seen that free markets do a good job. And there's got to be some tinkering and regulation, but ultimately, it just feels like this is interfering with free markets in some way.
Well, Apollo, but was not the CHIPS Act giving money to Intel kind of foolish, thinking that they would become with
hilarious?
They tried. Yeah, so
I'm a big proponent of government get out of the way. Let markets.
So will these tariffs stick, or is a lot of this bluff, or mostly reciprocal?
Yeah, and I think that's the question, because again, I mean, I don't know enough about the inner workings of the politics in D.C. It doesn't seem like, if you talk to most economists, I think that economically people would say that we are better off kind of resuming free trade. And if we do want to help those constituents who got hurt by global trade, there are much better ways than perhaps we've gone so far. But harming everybody else in the process, families who maybe are living on the edge, it's not necessarily the clever. So will they stick? I think to a large degree, folks, here's what I think about. I think that what gives me optimism is that as much as some people might disagree, I think that we have incredibly strong institutions in the country. And if these policies work, if tariffs work, and we all want to work because it means that the society is getting better. We all have a better life. And if these policies work, then, less than a year and a half from now, we're going to reelect or elect the people who champion these policies. And if it doesn't work, and if that turns out to be a disaster, well, again, in a year and a half, the country has a chance to, kind of tell us how they feel. And we had that free election, 6 months ago or 9 months ago. So, that institution is still incredibly valid. As long as the institutions hold, I think there's a great degree of optimism to be had. Because if they don't work, this is not something like the pandemic that we don't know what's causing it and how to deal with this. In this case, we've got to know it's a policy, and we've seen something like this in the past, and if things don't work out, we'll just go ahead and choose a different direction as a country in less than a year and a half from now.
And so, if you're a long-term, I think if you're a long-term investor, you can either focus on the immediate and think, oh my gosh, like what happens if this or that, or you can say, to your point, like it'll be a blip.
It will change if it doesn't work. That's actually That's, in my mind, that's brilliant, right? As long as the institution is intact.
Absolutely.
And depending upon what side of the aisle you're on, you may believe that the institution, in fact, is not intact.
Okay.
Well, and that's the thing, but people will vote with their pockets and their wallets. There's no doubt in my mind, because we've seen this every election. And Democrats who are not happy about the economy, they might vote Republican. Republicans who are not happy about the economy, they might vote Democratic. So I don't think that there is such a strong affinity towards the party, irrespective of the economic impact on my life. No, I think that people will vote based on the economy. But I do want to touch on one other thing that is really important for this conversation. That so far we discussed on the impact on businesses and consumers, but the markets, and this is where it gets so interesting, is the markets reacted to tariffs because of the unexpected magnitude of and breadth of tariffs. So the market was a little bit, the market expectation was different, and when the expectation got readjusted, we saw the big drop.
Yeah.
But I do have to make two quick comments on this. Number one is that markets tend to price expected changes in policy before they happen. If they're surprised, you're going to see big market moves. Otherwise, if the expectation is in line with the new policy, the market won't move because it's already priced in that expectation. But the second big one, guys, it's really important. Tariffs are not the primary driver of market returns, particularly over the long term. And to see this, look at the first Trump administration. We had 4 years of talk of tariffs, trade wars, blah, 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 all the things that we're kind of dealing with right now. And if you look at those 4 years, $1 invested in the S&P 500, the measure of the U.S. market, for the time that President Trump was in the White House for those 4 years, it actually went up by about 80%. So a dollar would have turned into $1.80. So which is a really nice growth over 4 years. Well, here's where it gets interesting, is that the country that we targeted, the country that we imposed the tariffs against, and really picked this economic fight, if you want to call it that way, was China. And over the exact same 4 years, the Chinese stock market did not go up 80%. It actually went up 100%. It outperformed the U.S. market and doubled in value. And if tariffs were truly the primary driver of market performance, neither the U.S., but particularly not the Chinese market, would have done so well. So this is one of the many, 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 many variables that impact the performance of the market, but not a primary one, particularly as you extend that from a day to a month to a year and to 4 years. And this year, what's the date today? It's around mid-June or so, and the U.S. market's relatively flat. So, it might be up or down a little bit, not that much at all. But here's what's fascinating. If you look at the countries that we are kind of targeting, a lot of folks are saying, well, they're going to suffer because we're going to impose tariffs on them. And we already have imposed tariffs on them. And you take, for example, Germany. Well, Germany, year to date, if you look at the MSCI index, is up about 30%.
Yeah.
You look at Canada. Our friends to the north, the friends that, they're up about 14% or so. You look at China, up about 17%. You look at Mexico, 30%.
That's hilarious.
Which means,
if you think that tariffs would be so devastating to their economies, why are all they crushing the U.S. stock market?
So all this information you gave me, I have nothing to do with it, other than just stay my current investments.
That's the key insight here. Stay the course, because all successful investors work with an advisor who help them kind of figure out what their financial goals are, create an asset allocation for them. And that allocation might not have known that tariffs are coming, but they knew at some point something might happen to the market. And I think the best, the folks who tend to have good outcomes in investing are the ones who stick to that plan, and they make adjustments not because of what happens in the market, but more of life situations. But they stick to the plan, and they talk to their advisor about this. And I think advisors at this point in time, they have an amazing value that they can bring to the table, because I keep thinking of advisors being like firefighters. When things are looking good, and not a big deal, like you're getting ready and you clean the equipment and all this stuff, but you really earn your keep when there's a fire. And we had fires in Los Angeles over and over, and people are saved by these firefighters who jumped in the burning home and saved their lives.
Well,
and I think that advisors are like this. They're like firefighters for somebody's wealth.
Apollo, that's I don't know if I 100% agree with the firefighter analogy with the advisor. I think it might be an overstatement.
Or at least as good looking as the firefighter.
Okay, but most advisors I know have no mustaches. So anyway, we want to thank you.
And Paul Lupescu, do you have a website if people want to learn more about what you're doing? Is there a way how do people follow you?
Allworth. I mean, I just follow you all through because we stay in touch a lot. But I know I don't have my own website. I do work for an investment management company, and it's been a privilege to actually work with Allworth as part of that organization. But again, I mean, okay. I don't personally have, but I always just say Allworth advisors have a way to reach me. So
all right, we appreciate you. Thanks for being on the show.
And I had no idea you like maple syrup that much. I mean, if you look at Apollo, he's like I think he swims or plays water polo or something. He's super fit looking. Does not look the kind of guy who drinks maple syrup.
Like Buddy the Elf when he put it on the spaghetti.
Yeah. Anyway, so it was great having him on the program.